Okay. Good evening, of God. Am I audible?
Yes, sir, we can hear you.
Hello. Good evening. Okay. Okay. I'm sharing my slides. I don't know if it's visible.
Yes, sir, it is.
Okay. Okay. So thank you once again, the organizers of this leadership series, for giving me the opportunity to sensitize the audience in terms of with respect to tax, the Nigerian Tax Act. I The title or the theme of today's presentation is the overview of the Nigeria Tax Act, the key reforms and the implications for businesses. Let us pray. Mighty and everlasting Father in heaven, Lord, we thank you for this gathering. We thank you for this opportunity that we have to sensitize ourselves. As I speak, O Lord, on the key issues that affect each and every one of us, I pray that it's very impactful to each and every one of us in Jesus' name. Amen. So I will start by I've been receiving a lot of calls respect to um, 26. A lot of people have been calling me friends and colleagues, telling me that yeah, they had money in their respective bank account are going to be taken by the government and categories and all that. So I would also use this platform to speak on that, that nobody is going to take your money that you have in account if there is no established liability. So what the current government is saying is that every individual, every taxpayer, every company has to register for tax purposes. And the law has been propounded in such a way that all banks, all insurance companies, all stockbroking firms and other financial services have now been empowered to ensure that they do a KYC, which entails that the tax ID will be a requisition to access those accounts. That is what the reform it's all about. And I also know there is a saying that two things are certain in life, and those things are is either death or tax. So that shows how very important tax is. So our table of content we want to intend to us to discuss. I will look at the background, what gave rise to the urge for this reform, what prompted the government to indulge in this total tax system, how did we get here? So what are the evolution of the tax reforms in Nigeria? We'll look at all the tax laws, when were they enacted. Some of our taxes were enacted as far back as 1901, 1951. So some of the economic conditions as at then are not feasible now. That is part of the things we're going to look at. We're going to look at the reform objectives. We're going to look at the underlying principles. What are the principles that guided the Committee on Reform to enact this law? We're going to look at some of the key issues with respect to the new tax laws that has been enacted. It's a lot of page. It's the Nigeria Tax Act alone is over 215-page document. So what we are going to do is to look at some key areas that might be of interest to this great audience, and subsequently, if we have some feedbacks with respect to what is required, we can have another series that will meet the specific needs of this audience. So lastly, last but not the least, we'll also look at the implications of the reform. So by the first item there is what gave rise to this ploy to overhaul the system? What is even the problem? What's the problem with the current tax law that we are currently using? So we found out that the government that is in place analyzed the tax laws and saw that there's a lot of more taxes. For instance, we have a case situation in Lagos whereby most of the companies that operate within the hospitality sector, they collect what we call sales tax, and the federal government also collects value-added tax. And we all know that these two taxes are consumption taxes. So ideally, it ought not be. So one of the things that is being promulgated is just to harmonize and to make sure that the issue of multiple taxes is being controlled. And we also have complex tax rules. Like I said, some of these tax laws were promulgated far back as 1990s, 1960s, and all that. And some of the legal jargons that were used is such that people don't even have an understanding of what they are supposed to do, which gives rise to high level of non-compliance, because you have to understand, you have to have understanding of what you ought to do before you do them. There's also the case of inefficient tax reform system and all that as it affects them. We also look at the tax to GDP in Nigeria. Tax to GDP in Nigeria is around 10%. And when we talk about tax GDP, we're looking at what is the production capacity of the country. When we compare the tax GDP of Nigeria to that of other West African countries, we have, I know Senegal is around close to 20%. South Africa is around 20%. Senegal is around 16%. So their tax to GDP is higher than of Nigeria. That is what this current government is trying to mitigate against. So on behalf of the tax authorities, we also have a low voluntary tax compliance and on ending dispute resolution. What this committee has come up to do is to create an enabling environment for taxpayers to resolve disputes in case it arises. So I'll go back to the next slide. How did we arrive where we are? We found out that in the past, the political will to even make these changes has been lagging behind. During the government of Buhari in 2019, they came up with what we call the Finance Act 2019. And the Finance Act of 2019 was just a way of trying to pick up some sections of the laws to amend them, because a holistic and overhaul of the whole tax system, it takes a lot. I know that the committee headed by Mr. Taiwo Oyedele has been there for over 2 years since the inception of this government. So an overhaul of the whole tax system is not something that comes as easy as we can see it. So that is why the past governments were taking some sections to amend. And that issue is that we have is that we have a lot of large informal sectors. And when you have a large crop of informal sectors, it takes a lot of sensitization to even make them to understand what their responsibilities should be. Also, what has affected the tax system is the state of insecurity, because most companies will find out that most companies are even going out of the country as a result of high level of insecurity. So these are the things that has led to this reform, this total overhaul of the tax reform. So we'll go to the next slide, which is the condition of tax reforms. Like I said earlier on, most of the tax laws that we spanning from stamp duties order of 1903 that was when tax was enacted. We have the direct tax ordinance, from where Nigeria kind of stereotyped what we call the company's income tax. So we have the petroleum profit. So these taxes, what we are saying is that these taxes have become a cake. It doesn't reflect current economic environment that we find ourselves. A lot of ways of doing business changed. And for you to tax these businesses, you need to align your tax laws in order to be able to tax your businesses. So we have the reform objectives. What is the objectives of this committee? What is the objectives of these tax laws that we have harmonized? So one of them is the harmonization of the tax laws. Like I said earlier on, we have a lot of taxes, over 12 taxes in different tax books. So most times what happens is that even taxpayers find it difficult to, collate these tax laws, and it affects compliance. So this tax law has harmonized all the tax laws into one book called the Nigeria Tax Law. So another thing is efficiency and modernization. The essence of this tax law is to ensure that there is efficiency in the way and the way we administer tax laws in Nigeria. We also have a simplified tax rules. Like I said earlier on, the language or there seemed not to be clarity in the way these laws were carved. So which also makes it difficult for people to have a clear understanding. One of the principles of taxation is simplicity. So if you are making a law, it should be concise and simple enough for the citizens and the populace to have an understanding of what they are supposed to do. So the fourth objective there is transparency and integrity of revenue administration. We also have an updated tax laws that reflects present realities. I said that most of the things, the way things are being done as at 50 years ago, it's not the way it's done now. And most of these laws were done then. So there was need to reflect the current reality with respect to our tax laws. So under objective is to align ourselves with the international standards. Tax administration, it's not restricted to Nigeria alone. So we in Nigeria, there's the preparation of financial statements has to do with rules and regulations. And there are bodies that have been set aside to update these rules, which is called the International Financial Reporting Standards. So there is a body that is entitled to update the way we prepare financial statements. And as a tax administrator, what we are doing is to administer what the company has prepared. So for you to be a tax administrator, you should also know what the standards say, and the tax laws should align with the current happenings. So that is another reason why this tax law was kind of updated. So, and the last but not the least is to broaden the tax base. A lot of people, sorry to say, are not on the tax net. So it's a kind of burdens the few people that are currently paying taxes. So what this law is trying to do is to broaden the tax base, bring in a lot of people who are supposed to pay tax, let them pay their share of tax, and by doing that, it will lessen the burden on the already existing people or companies that are paying taxes. So the next slide is about the underlying principles. What are the principles? What gave rise? What is the push for this reform? One of them is to ensure that there is clarity and simplicity. Clarity and simplicity in respect to the tax laws. The legal jargons most times make it difficult for people to have an understanding of what they are supposed to do, like I said earlier on. And that principle is to unify, like I said earlier on, the tax legislation and to sensitize the economy. The under principle is efficient tax administration practices. I would go to the next slide because I would want to be very impactful with respect to this, to the audience. I don't want to go too technical, so that it can be interactive. So what are these new laws? What are these new laws that has been harmonized? So we have like over 12 laws, like I said earlier on: the Companies Income Tax, the Personal Income Tax, Petroleum Profit Tax Act, Stamp Duties Act, all these taxes, that are 12 of them, which were concise, which were harmonized into two laws, called, the one is the Nigeria Tax Act and the Nigeria Tax Administration. The Nigeria Tax Act embodies this law, the laws, while the Nigeria NTAA, Nigeria Tax Act Administration, is an act that specifies how to administer taxes. We also have the Federal Inland Revenue Service Establishment Act, which is now called the Nigeria Revenue Service Establishment Act. It's just to show that the environment that we're operating is Nigeria. We also have the Joint Tax Board, which has now been renamed as Joint Revenue Board. So go to the main issue of the day, which are, what are the key changes? What are the changes? Like I said earlier on, the Joint Revenue Board has replaced the Joint Board, and the essence is to ensure that there is harmonization. I need to specify that a lot of 30 states in the country, and those 30 states have their own respective tax authorities. So that where an individual or where an individual is resident is where it is supposed to pay tax. So when there are issues of residency, being that I know some people that live close to Ogun State, there's always an issue of residence. Some people work in Lagos and live in Ogun State. So ideally, the law is that where you are resident is not your place of work. What should take priority is where you reside. So where you reside is where you should pay tax. So when there are issues, it is the Joint Tax Board that has been empowered to resolve such issues between states, and in some cases when it affects even the federal level. There's also a coordination. The Joint Revenue Board has been empowered to coordinate the Tax Appeal Tribunal. I need to pause here to explain. When the current procedure is such that a company is entitled to self-assess itself and file at the relevant tax office. So when a company self-assesses itself, the tax administrator will call risk profiling to know, to verify the authenticity and how the company has complied. Where it feels that it has not complied fully, it is scheduled for a tax audit exercise. And after the tax audit exercise, it will give room to either an additional tax liability, a zero tax liability, or a tax refund. And most times when I talk about tax refund, people laugh, and in Nigeria it's equal to another. So this tax law is trying to harmonize all this to make it seamless. So the Tax Appeal Tribunal, it's an avenue through which, where there is dispute between an assessed liability, where there is a dispute between a self-assessed liability and an additional liability. If a company feels that no, what I've assessed myself is the right thing, they can go to the TAT. That used to be the old law, but now there's what we call the tax ombuds. So we'll find out that the Tax Appeal Tribunal has been overflooded with some issues that would have been resolved at a lower level. So this the NTA has brought up what we call the Tax Ombuds Office. So though the Tax Ombuds Office is just a resolution body, it's a complex resolution body for taxpayers. It is now a first line of call. Before you go to the TAT, you have the option of going to the Ombuds Office to see if that issue can be resolved. So we will have the income tax. I'm trying to pick some of the items and explain them as it can be impactful for us. So we have the income tax. Now we have like I said earlier, we have a defined income tax rules for companies, individuals, including capital gains. Before now, when a company sells or disposes its fixed asset, property, plant, and equipment that it uses to generate revenue, that's what we call capital gains tax, and it arises where the sales proceeds, when the proceeds, the amount of consideration is higher than the cost. The difference is what we call capital gains tax, and there is a different act that governs that. But now everything has been brought into the Nigeria Tax Act. Before it was taxed at 10%, but now it is being taxed at 30%. And also, that thing I need to call our attention to is that before the introduction of the NTA, it's possible that a company can sell an item lower than the cost. And when a company sells an item lower than the cost, what we call capital loss arises. In the old tax law, capital loss is to your tent, O Israel. It is not being recognized. The company bears the brunt. But however, capital gains tax is taxed. So people, the reform committee looked at it that no, if a company makes a loss arising from the sale of a PPE, it should be deducted from capital gains before taxing, and that is exactly what has been done. So we have a resource tax whereby also in terms of the harmonization, the Petroleum Industry Act, the Petroleum Profit Tax Act, and Deep Offshore Act, this affects companies in the oil and gas upstream. So they've all been harmonized into this Nigerian Tax Act. We also have the Value Added Tax, which is also a tax, an act of its own, which has also been embedded into this Nigeria Tax Act. Now, the key changes that, as it affects value-added tax, is one that I know that federal government has relinquished. Before now, federal government takes up to 15% of the total value-added tax that is generated in Nigeria, while the states take 50% and the local governments take 35%. But now, the federal government has relinquished 5% from each stake to the state. Though some people are clamoring that this move might be a case of robbing Peter to pay Paul, in the sense that when you look at the technicalities involved with respect to the tax, how value-added tax is being charged now. For instance, before the new tax law, that's what we call output VAT. And output VAT is, it is expected that a company, when you issue your invoice, at the point of sale, when you issue invoices, you have to charge VAT. And that VAT you are charging on your sales invoices is what we call output VAT, and that is 7.5% of the consideration. Now, when you purchase, you make purchases that are directly attributable to those to your sales, in quote, directly attributable to the sales, you have to, and because of that purchase, you must have suffered what we call input VAT. Input VAT is the VAT that you suffer in the course of purchasing items that are directly attributable to your sales. So the law requires that the difference between your output VAT, that is your VAT on your sales, minus your input VAT, which is the old law was restricted to only purchases that are directly attributable to those sales, is the balance that you now remit on monthly basis. You are ought to make transaction in September, and you ought to remit on before the 21st day of October of the next month. So, but now the new law, why people are looking at it that the presupposed reduction of federal government stake is not feasible, is the fact that before now the VAT, the input VAT suffered on capital items, and we know that most of these items are so huge. The VAT suffered on these capital items are not regarded as input VAT that will be charged on output. The new law has made it in such a way that whatever VAT that you suffer while you are purchasing your capital items, even your administrative expenses, your OPEX. So whatever VAT that you suffer will be hit to your output VAT. And that means that the VAT base will be significantly depleted, while the company's income tax, which is the one that the federal government is more interested in, will grow exponentially. So we also have the Stamp Duties Act. You know, before now, some of the penalties in stamp duties, we have one that is 20 naira for not complying, one that is 100 naira. Now, all this has been upgraded. You agree with me that the essence of penalties is to deter, is to encourage compliance. So if we have penalties that does not reflect, or that is not deterrent enough, it will encourage, it will more or less like encourage taxpayers to continue in indulging in non-compliant acts. So we have the personal income tax. The key change there is that that's what we call consolidated revenue allowance. When you have your chargeable income, that is your income from all sources, you are granted what we call consolidated revenue allowance. That used to be 20% of your annual income and plus 200,000. Now that has been abolished, and in place of that, there is what we call a rent relief, and that rent relief is just 20% of your annual rent income. I mean, 20% of your annual rent expense. So if you have a 5 million annual rent, so and you pay 20% of that, 20% of 5 million, that's 1 million. So what the law is saying is that there is a peg, there is a restriction of 500,000 if peradventure that your 20% of your rent expense exceeds 500,000, you are being restricted to only an allowance of 500,000. But if it is lower, if 20% of your annual rent expense is lower than 500,000, it will be restricted to that amount. For instance, if it's 200,000, you are not going to be granted 500,000. It will be restricted to 300,000. Furthermore, another key change that affects personal income tax is there's now a simplified tax rate band. Before now, all individuals will pay tax, but now, if you are earning an annual income of up to 800,000, you are now exempted from paying companies personal income tax. So for the corporate income tax, which is now part of the NTA, has now restricted. Before now, we have three sets of companies. We have what we call the small tax, we have the medium tax, and the large tax. However, the new tax act has reduced two tax bases, which is what the small tax and the large tax. And the small tax was also defined in the tax law. A small tax company is now a company that its annual revenue is up to 50 million or less than that. So a company that has an annual revenue of 50 million or less is regarded as a small company, and the fixed asset base should not be more than 250. So there is two factors here to ascertain a small company. Small company must be less than 50 million or less. So if you 50 million, the fixed asset base is less than 250, it will pay zero tax. That is exempted from paying companies' income tax. But the issue here is that people are looking at what if it has a turnover of less than 50 million and the fixed asset base is over 500 billion. Is it classified as a small tax? So I believe that the committee is looking at a situation of not encouraging inefficiency. If we look at it technically, a company having over 500 million is not efficient enough when it claims that the revenue it generates with over 500 million fixed asset base is just less than 50 million. I believe that is why they have that section in order not to encourage inefficiency. Also, another thing, under the definition of small tax, the small tax does not include professional services. That is how it's defined in the tax law. So for companies that are consulting firms, professional firms, engineering firms, and all that. So whether your turnover is less than 50 million or not, you are not classified as a small tax. So that is how the law looks at it. So the next item is corporate tax, is that the capital allowances has been annualized. Before now, we have what we call initial allowance. I really don't want to go technical, but we have what we call initial allowance and annual allowance. But now it has now been restricted to, it has now annualized. So there's nothing like initial allowance anymore. Also, another thing that this the tax law has done is to incorporate some items. Before, when I said that, I did say that the ways of doing business has changed over the years. Before now, we didn't have telecommunication towers, the power lines, and all that. So the law did not envisage a claim of capital allowance on these items. But now the new tax law has incorporated them into tax law. The next item is what we call the key, and that key change is what we call hydrocarbon tax. This is a tax that operates within the oil and gas upstream. Because of how sensitive this sector is, when mine all the crude oils, there's a lot of environmental degradation that affects the environment where they operate. And to clean up this environment, it takes a lot of capital to do that. So what happens in the past is that most of these multinational companies tend to, set a fund in their respective companies. I mean, their respective countries. They set some funds aside so that whenever they finish their, they repatriate this money and now use it to clear those areas. But what this law is saying now is that for us, for this fund to be allowed, because ideally it's a provision. Provisions ought not to be allowed for tax purposes. But this is a special provision that government saying now, if we are to allow this provision in place, the money must be deposited in a Nigerian bank. And the essence is to ensure that the money is being used in the country rather than abroad. Also have what we call a global minimum tax. So there's what we call base erosion shifting, and what it means is such companies do their tax planning in such a way. National companies are being planned to less tax, whereby in most cases what they do is to inflate their costs. The cost at which they repatriate most of the goods or the things that is being sold there in the country is inflated in such a way that at the end of the day, the company here will pay little or no tax. So what this law is trying to do is to say, no matter whatever loss that you encounter, no matter whatever happens, we are going to take 15% of your net profit, irrespective of whatever comes below the line. So we have the Tax Administration Act, like I said earlier on. I'll try to speed up. Wherever we stop, we'll be able to continue. So the Nigeria Tax Act Administration have relevant tax authority. This tries to define the authorities that are responsible for tax administering different sectors. Like I said earlier on, the states The state is responsible. The relevant state governments, their internal revenue services is responsible for business transactions, administering personal income tax for people that are residents in those areas. They are also responsible for what we call advance payment of tax, which is withholding. So if there is a business transaction, a contractual business transaction with an individual, that tax should go to the state. So we also have a taxpayer registration. So that brings me back to where I started. Every individual, every company will have to register for tax purposes. So when a company, for instance, a company is incorporated, the company is supposed to register for tax purpose, and failure to register, there's a penalty for it. And that penalty has been increased to 50,000 in the first month that failure occurs. So if in subsequent months, the company still fails to register for tax purposes, there is a subsequent penalty of 25,000. So if you don't register and months are going, so there's a penalty for that. So that is, and the essence is to encourage um, taxpayers to register. And in another deterring clause to this aspect is that as a company, if you give a contract to another company that is not registered for tax purposes, there is you are going to be charged an administrative penalty of 5 million. So it's huge. So we need to be careful. This is why getting to aspect that affect us as entrepreneurs. So we need to be very mindful of this. If you are issuing any vendor suppliers, you need to verify that they are registered for tax purposes. They should have what we call, for companies, what we call tax identification number. That is an evidence of registration. For individuals, it's pay ID. So when you are having this business dealings, you have to ensure, you have to be sensitive that you are not being so we have another key change is that of tax agents. Before now, we have consultants to represent taxpayers in their accounts and all that. But now they need that we have to accredit these tax agents, the taxpayers or their clients, as it were. So the that there have been a lot of issues that people who are not qualified as as a professional take up responsibilities they are not ethically and professionally qualified to handle, and it creates reconciliation. So that is the essence of this accreditation. And I believe the implementation might give us some kind of issues, because I believe that the government will, the Federal Inland Revenue Service or the Nigeria Revenue Service from 2020 to 2026 will come up with circulars to really sensitize taxpayers on how some of these gray areas will be implemented. Now, we also have all the tax. Now, there is a benchmark of 90. So when a company is claiming a tax refund and after an audit has been conducted, that company has to be refunded in 90 days. And also, a dedicated account has been set out to make this process seamless. And another thing I need to pay attention to is the fact that when a company is claiming a refund with respect to that is being expedited, and no, it's been stated that there will be audit for that because of the company would need its working capital to be able to function. So another item there is that the issue of technology has been captured into the tax law. Most of our departments in the land tax sector has started already. whereby softwares are being embedded in companies' accounting softwares in such a way that there's a sync when they are making their sales. We are collecting our VAT on the spot. So another key item is the with respect to tax. Also, and that we need to be very attentive to. It's expected that as a company, when you in 18 months of incorporation, you have to file your return. In the past, we call it statement of affairs. So whether you have started business or not, file an account with the relevant authority. And failure, there is also a penalty of 100% in the first month that the failure happened. 12 months is encouraged as companies and businesses to be sensitive to these clauses. If you have, you are required to file annual returns on after your accounting year end. So if accounting year end is 31st December, it is expected that on or before 30th June, you ought to have filed to the relevant tax authority. This will avoid penalties, as it were. So we have the Nigerian Revenue Service Establishment Act. So again, this might not really be of interest to this audience. We'll have the, let me quickly go because of time. I've spoken about the Tax Appeal Tribunal. I've also talked about the Office of the Tax Ombudsman. Like I said earlier on, the S of the tax ombudsman is to reduce the burden on the Tax Appeal Tribunal. We need to understand like I said earlier on, the resolution of the Office of the Tax Ombudsman, it's advisory. It's advisory in nature. You cannot take it anywhere. It's advisory, while that of the TAT is binding. So we'll go to the what are the implications of these tax reforms. So one of the implications is compliance environment. We have, like I said earlier on, there is need to unify these more than 12 laws. There is need to unite them into one book so that it will even be easy for taxpayers to quickly understand, to have an understanding of what their responsibilities are. And that implication is a simplified tax rule for each operation. I've said that. Consolidated returns filing date, yes. The filing date for companies income tax, personal income tax. I forgot to state that if, for company people that are employees, their filing is that's for individual. Their filing should be 31st January. So on or before 31st January, your employer is supposed to file for employees on or before 31st January. However, for individuals that have business names, not a limited liability, individuals that have business names, you are supposed to file to the relevant tax authority. And the relevant authority, I mean where you are resident. So where you are resident, you are supposed to file on before 1st March for somebody having a business name. So you're supposed to file on or before 31st March of the next year. So we also, under implication of the oversight on tax authorities' operations. You know, it's how there's now a clear guideline on how we administer taxation. Also, have that another implication deployment of technology. Like I said earlier on, without technology, we will not go far. The world has changed and is still changing. So the law has giving us the enabling environment to really deploy some of these technologies that we feel that it will aid us in generating revenue for the government. There's also a standard dispute resolution regime for taxpayers. So with respect, the implication that as it affects investments and businesses, like I said earlier on, the income-based taxes have been reduced to only 2. Before now, we have what we call the national, that's information technology tax. We have what we call the police trust fund. We have the tertiary education tax. These are all taxes that is being hit on the same company. Now there is one single tax that is called development tax, which is now taxed at 4% to streamline most of these taxes. There is now a reduced burden for businesses operating in Nigeria. Yes, the tax is expanded, so the already companies that are paying tax, there will be a reduction in the tax burden. Well, there are waivers. There are waivers that has been given, tax intensive incentives that has been given to companies to ease the burden of their operation. Governments at different levels use different mechanisms, different measures to sensitize the economy. The government can use monetary policies, it can use fiscal policy, and whatever is being done in tax is government's ploy to use fiscal policy to sensitize the economy. For instance, when the government feels that some certain local companies are not operating at their level, they can choose to increase the tariffs on what they are producing. That will aid them to encourage the production of all those things locally. Alternatively, when it's also seen that there are no local companies that are producing a very sensitive item, government can as well reduce taxes for companies that want to invest in those sectors. So, in essence, fiscal policy is a way to sensitize the economy. And that implication is reduced opportunity for non-compliance. Like I said earlier on, there is now a stronger and deterring penalty regime. So those penalties that were, like I said, stamp duties, you have 100 naira penalty and all that. So there is a stringent penalty which is aimed not really to weaken the populace, but to encourage tax compliance. What this government is trying to do is to ensure that there are self-compliant companies, so that the impact will be felt in the company. It's one thing to generate revenue, and it is another thing for those revenue generated to be used for what it ought to be used for. I know some people were clamoring that is employed to just to generate revenue. I believe that when the tax base, that's my personal opinion, I believe that when the tax base is expanded and people pay their fair share of tax, then the government at different levels will be held accountable. People will be forced to hold government at various levels accountable. Because you pay your fair share of tax, it strikes you to be involved in governance and how it's being run. So another implication is on the social economic conditions. So now there is the poor and the vulnerable is a relief of tax. I said earlier on that if you are earning revenue income of less than 800,000, you've now been exempted from paying personal income tax. So that by doing that, the vulnerable are now being relieved of tax. Alternatively, when revenue is increased, it will avail the government the resources need to improve our infrastructure. It will give them room to improve the security situation, and by doing that, it will also enhance the ease of doing business in the country. And this is where I would stop for now. Thank you so much for this opportunity once again, and I'll also give room for questions and answers. Thank you.
All right. Thank you, sir. That's a wonderful one. I think let me begin with the question because you made mention of something that has to do with companies entering into a host community whereby their lands are degraded, and then there are these money stocked in there for a kind of what you said will be used for a cleanup. And then unfortunately, we are not seeing this cleanup even after mining and then a lot of things, exploration around the land. These companies still went without doing the cleanup. Now, if I may ask, though that may be very deep, but if I may ask, where do you advise such a host community to go for their asking for that cleanup thing? At what point? At what point do you think a host community can actually ask for such cleanup, so that we don't also miss mark? Hold that with you. That is question number one. Then question number two, don't you think that as this tax reform is spreading, that it will one day in the near future even affecting churches? Don't you think that someday it will affect churches too? And then you talked about individual tax paying, so that, and you said you encourage us that if after paying, we can now go and ask, in as much as the tithe we pay, I mean, the tax we pay will relieve a burden from those who are vulnerable, according to what you said. Now, and you said that after being paid or after paying your own, you can now at that time ask the government from every platform or whichever platform you belong that is close to you, for them to account for what's it called? To account for such payment. I think you said also something like that. Now, the question is this: that as a citizen of this country, for instance, one thing I've not heard from you is the aspect of exemption. At what time will exemption come? Or we should not? Are you encouraging us now, because this is in-house thing? Are you encouraging us not to even look at exemption in any form? Because, like I said, it was a play or a joke, just a mere talk. We were discussing an issue came, but I can tell you, a lot of people are not happy over it. Are there areas we can also look at? Okay, these are areas exemptions can come for indigenes or citizens of this country or your local government, based on where you are close to this thing. So, are there things like that? I just want to ask these few questions. Maybe you have something to bring in, so that people can also use it to educate one or two people who are very far from here and also looking for such solutions to make a headway. Thank you.
Okay, thank you so much. I can also see a hand raised, but I think I can address questions of yours for now. Afterwards, we can, or how do we go about? Do I address the questions now, or let us have all the questions? How do we go about it, sir?
Okay, fine. If you have note of the question I've asked, I think we'll take from other ones. You put them together at once.
Okay.
Okay, so Brother Nel, over to you.
Good evening. Can you hear me?
Yes, I can hear you.
Yeah, good evening, sir. Thank you so much for such an insightful what's it called topic. It was you really did a good job with breaking down everything. I just wanted to ask, not particularly part of what you mentioned, but there has been something that has been on my mind regarding you know tax paying and all of that. I realized, though, I noticed that there are some agencies, government agencies as well, that if maybe you need to make any particular payments to them currently now, they would the only way that they accept that you make those payments to them is through taxpayers ID, through with taxpayers ID. And it was something that just happened, that this is a new development. Basically, for example, the Lagos State Material Testing Laboratory, if you go to them to carry out a test in their laboratory and you need to make payment for the test you've carried out, you would have to make payments with your taxpayer's ID at the bank and then come back with your taxpayer's ID slip, as an evidence of payment before you are attended to. So I wanted to ask, is this part of the new reform as well? And also, how are these type of payments now handled, and when maybe FRSC needs to come and maybe check tax payments, say in an organization and all of that, where would these payments like this with the taxpayer's ID be recorded under? Is it also part of task at the end of the day, or there is a separate this thing that things like this are recorded as? Just wanted to ask that. I don't know if I hope you got the question.
Yes. I got the question. Thank you so much for that question. Maybe I would start with the last question. Yeah, with respect to what you said, there is what we call transactional taxes, and transactional taxes. One of them is value added tax. So in the course of, for instance, you walk up to you go to ShopRite and purchase anything. What you have purchased, you have paid a tax. Not necessarily your personal income tax is a tax. So there are other levies. For instance, the narration you gave now is probably a levy that has been charged. Maybe you have a building project you want to do. So what has happened is that the federal government is trying to make sure that everybody is registered. So what you are paying is not a personal income tax. It's just an avenue the government wants to ensure that whoever is having a transaction with it, it is registered. So that tax, to answer your question specifically, that payment that you made is not your personal income, it's not your tax. It's just a kind of levy that you have paid. It's not a tax. I don't know if that addresses it. By making use of that taxpayer ID is to make some people, let me give you for instance. There are a lot of people who have buildings, individuals, high net worth. They have buildings in Lekki, all those places. They don't have a tax ID. So if such a person now buys a property and wants to go to register, so it's an avenue through which to make sure that, do they even have a tax ID? And to ensure that they have a tax ID. If they have a tax ID, the next level will now be, you have a tax ID. Have you paid taxes? So if you have not paid taxes and you have the wherewithal to purchase that high level of property and you are not paying any tax, so it's a stage. It's just a ploy to bring people to TaxNet. So I don't know if that addresses your question, Mr. Danny.
Yes, it does. Thank you.
Okay, thank you. So okay, I can see another hand. Maybe let me address these ones before we take other questions. So the Garrick, you did mention about the host community, where the host communities will lodge their complaints with respect to the expectations they have. Yes, I did mention that there is a fund that is set aside by um, these multinational companies. Maybe the government has looked at it that even the funds that are set aside is not here in Nigeria. Maybe if it's being brought in Nigeria and it's a Nigerian bank, it will be faster to be able to use it to do what they ought to do. So I believe that that is a ploy to mitigate against um, that act of most of these multinationals. So if paraventure, there are environmental degradations, they have finished their mining, there are legal pathways with which one can lodge their complaint. Though it's beyond that of a tax administrator. I know that we have lawyers and that there's a pathway that the host community can use. But I assure you, this step that the government has taken with respect to making sure that these monies, there are huge sums of money, that these monies are brought back in Nigeria before it's allowed. I think it will expedite the challenges that is being like being felt in that sector. I mean, as it affects the host communities. The other question you asked is in respect to churches and the way tax is going. Are we not sure that churches will be paying taxes or something like that? There are exemptions. NGOs. So there are some. Like I said, it's a whole lot of documents. So what people do is to look at some areas that they can speak on. So subsequent questions, subsequent interactions, and give rise delving into other areas. I know that churches are exempted from paying companies income tax. So for now, companies will not pay tax, will not pay companies income tax, but we need to differentiate between what we call companies income tax and transactional taxes. And what I mean by transactional tax is what we call advanced payment of tax. So if, for example, a church has a business, in fact, that exemption is with respect to church. So if a church opens a business venture that is profitable, it will pay tax. So the exemption is that church, as it were, maybe rent offering is exempted. Tithe is church activities is exempted from paying tax. However, if a church ventures into a business outfit, the profits attributable to that business will be subject to tax. And also, even if a church has not ventured into a business outfit, for example, the church is having a building project. If the church gives some contract to companies to execute this business project, they are mandated, it's an agent, they are mandated to withhold transactional taxes and pay to relevant tax authority. So that is my response to that as it affects churches. So in summary, churches do not pay tax with respect to church activities. However, a church will pay tax if it ventures into a business outfit, a profitable business outfit. Then you talk about how the reform process will be executed, or how it will be claimed or something. Yes, in the past I did say that there are there are lots of issues with respect to the refund process. Even in the past, what people resorted to is to have an understanding or understanding in such a way that they will now use their credit. They use the instead of claiming the refund, they use it as a future credit to offset future liabilities. I forgot to mention the fact that even like before now, if you have a refund, if you have a refund on VAT, you cannot use it to offset companies' income tax because they were looking at it that there are different taxes. But now, if you have a refund claim can be used to offset value-added tax can be used to it can be used to offset any type of tax. But with respect to the glitches that were being felt, now that an account has been set out by the Accountant General of the Federation, and the fact that timeline have been given upon which this refund has to be given, I believe that there will be upgrade from where we are coming from. So if a dedication account, a dedicated account has been set aside and a timeline has been given, I believe that it will improve the system from where we are coming from. I understand your where you are coming from. Even a lot of complaints with respect to that. With this new policy, there will be a way forward to it. Though we know in Nigeria that we have fantastic reports, we have fantastic committees, fantastic policies, but the major problem we face in this country, I can tell you, is implementation. But I hope that this government, I know that this government is determined to implement what they are setting for. Thank you. I don't know if I've captured your listen. Are there other hands raised? And I'm open.
All right, thank you, sir. I think Bro Pe and then Bro Mr. Okechukwu Okeze, just one after the other. Bro Pe, you first before the next person.
Okay. Good evening. Can you hear me?
Yes,
Yes,
sir.
I can hear you.
All right. Thank you very much, Brother Kelechi, for this insightful discussion. Very quickly, please, I just want to confirm for investments such as fixed income investments or the capital markets, other than the taxes withheld by the fund managers or the brokerage companies, are there other taxes you're supposed to pay? And at what point? Yeah.
Okay. For instance, the income, when a company is if you're paying dividend as an investment return, you are supposed to, paying company has to withhold company's income tax, and that tax is final. That's what it is final. There is no other tax with respect to that. So that is that for that. I don't know if you. I didn't get the last you said.
Okay, please let me ask my question again. As an individual, when you invest in whether a fixed deposit or whatever it is, at the point where you are being paid the interest on that deposit, I believe the fund manager would have withheld, whether it's a withholding tax or something. So when you are paid into your own account, are you still supposed to pay any taxes, and at what point?
Okay. Thank you for coming up with that clarity. Okay, now if you have you earn an interest income. So how it works is that the paying bank or the company would withhold. However, when you are filing your returns, there is opportunity for you to, that tax that have been withheld, there's opportunity for you to set off against what is your self-assessed liability. So it's a set off, you have to set it off for interest income. However, if what we are talking about is dividend income, the law exempts dividend income from further tax. So if you earn a dividend income, they pay you dividend income as a result of the share you have invested in a company. What that amount that has been withheld is final. It's called final tax. You don't need to. There's no further tax on it. I don't know if that addresses your question.
Yeah, thank you. Is there a further tax on interest income deposited in your account, or there's no further tax after the withholding?
There will be a further tax. What I mean by that is that, for instance, if you are being paid an interest income of 1 million, and you are being paid an interest income of 1 million, and maybe let's say 100,000 was deducted as withholding. Now, you know, the 900,000 will form part of your your chargeable income. It will form part of your income that your total, from your total, when you've gotten your total income from all sources, it will now be subjected to different tax rates. So what we're saying that when that from income from all sources, when it's being subjected to different tax rates, it will come up to a figure. Let's say, for instance, after all this, it comes up with a figure of 500,000 liability you are supposed to pay. You will introduce this 100,000 that was initially deducted from that 500,000 and now pay the government 400,000. So there is a further tax on interest income, but there is no further tax on dividend income.
Thank you very much, brother. Thank you.
Thank you, sir. There's another hand raised. Mr. Okechukwu Okeze.
Okay. Good evening, Kelechi. Thank you for the training and also insightful exposition for us to understand the background and where you're coming from. Thank you very much. So I was listening carefully, and I had some kind of thoughts, and I was trying to get a very good background of someone's transactions. So for me, I would like to know if for every transaction you make, you must clearly state the reason, because I feel that with this new tax law, that means individual accounts that may be operated for businesses but not registered as a company will also is liable to tax. Is that right? If I ask that question before I go ahead with my question.
Okay. It is advisable that you don't entertain unnecessary transfers into your account. Transfers, it's not well explained. For instance, if you have a transfer that is clearly described below by the bank, definitely a taxman coming to review your bank statement will see it clearly as a loan. But if you are having any business engagement, you have business dealings within, and a taxman comes and sees the names of individuals paying to your account, it will be difficult to to make a taxman or to explain to him that it is not ideally.
Hello, I can't hear. Can you hear me?
I guess
Yes,
it's network.
we can
Let's
hear you. I believe Okelechi's network is the issue.
Yes, it's network. Let's give him a few minutes, please. Thank you.
All right, sir.
Okay, I'm back. I lost connection. Apologies.
Okay.
Can you hear me?
Go ahead.
Yes, sir, we can hear you.
Please go on. I was disconnected from network.
Okay. Okay. Have you finished the explanation? Okay. Can you hear me?
Yes, we can hear you clearly now, sir.
But I think it,
I wanted. Yes, I can hear you. Should I go on? Hello.
yeah, you can continue.
Okay. What I was explaining is that to be mindful of the inflows into your bank statement. It needs to be properly described in order to convince a taxpayer that, I mean, in order to convince a tax administrator that it is not an income to you. It can be a loan, a family loan, or somebody giving you money that is not revenue. But it is advisable that such inflows that are not your for your business should be discouraged from entering into your business. But if it is an individual, it we have a lot of that are being made. Nobody will come to just take up the credit side of your bank statement and subject it to tax. It has to, there will be reconciliations. And like I said earlier on, there is the ombuds office. There are legal pathways to, even if a tax administrator decides to be excessive or over ambitious with administering tax, there are avenues through which that can be curtailed. You said you had a further question to that.
Okay, yeah, my question goes to, yeah, you actually indirectly touched the area I was going. Like, someone is administering a loan to me and I use that loan to do business. So, in that case, is that loan taxable?
No, the loan that somebody gives to you, it's your working capital. That is what you use to generate revenue. Nobody taxes loan. However, the revenue that you generate using that loan is what will be taxed. And even the interest expense that you are going to be paying back for the person that gave you the loan is an allowable deduction for tax purposes.
Okay. Thank you. So I did a calculation because I saw the tax calculator online. I did a calculation and I had some deductibles. Adding, you talk about insurance, you talk about house rent, the NIHIS, and I think there are some deductibles. So when I made my calculations, and I also assumed that I didn't have some of them, so some of them I put zero. There were different percentage that came up. So as an employee and you have an insurance or you borrowed a loan from a bank, from a cooperative or bank or anywhere, would those, because what I saw there is that those things will be exempted before the actual tax is administered on your income. So please, can you explain further for me on that?
Okay. Yes. There are allowable deductions for tax purposes. When you have before the tax rates will be applied, there are allowances that will be granted, which I said earlier on, the rent allowance. Now, what I didn't specify is that, like you rightly said, there are what we call legal deductions, like the pension contribution of the employee. You have the national housing fund, even a life insurance premium that you pay. It's eligible. It's an eligible deduction. So all these will be, it's like a first line charge. You have to deduct them, and it of course is done by your employer on your behalf, on behalf of the employee. So all this will be deducted before the tax rates will now be applied. The first 800,000, as it were, as the new law specified, will be exempted from tax. Subsequent amounts will be applied using those tax rates. I know that the tax rates for the first 800,000 it's zero, like I said. The next 2.2 million is 15%. The next 9 million is 18%. The next 13 million, 21. The next 25, 23%. And above 50 million is at 25%. So all these, we call them eligible deductions. National Housing Fund, National Health Insurance Scheme, pension reform, life premium paid for life insurance, and the rent allowance. Yes, you are right, sir. That is portion of the law.
Okay, thank you very much. Lastly, if I have a house and that house is under rent, well, am I liable to pay tax on that house?
Okay, if you have a house and you earn rental income from the house, is that
Me,
what you're
I
saying?
mean, I mean, it's not under rent. There's no rent. Maybe the house is empty. Nobody is occupying it. Am I liable to pay tax on the house?
That okay, you build a house, you are living in the house. It is your house.
No, no, no. Maybe I built it for commercial purpose, but it's not at that moment in use. Nobody's occupying it because I didn't see any tenants.
That means for that year that there is no tenant, there is no rental income. What is taxed is not the building. What is taxed is the rental income that comes from the building. So if the building is vacant, what you might probably pay, whether somebody is occupying it or not, is what we call is it this development levy that is being collected at state level. But with respect to tax, nobody taxes will tax you from. It's only rental income that you'll be taxed on.
Okay. Thank you very much.
Thank you, sir.
I think Sister Morola is also here. Please let's give her a chance before we close. Okay.
Yes, thank you. Thank you, Brother Kelechuku, for the very insightful presentation. Yeah, so my question is around the number of digits in the tax identification number. Okay, so over the years, my tax ID has been 7 digits, N-4, N-7 digits. But I was trying to fill a form recently and I saw that I was asking for a 12-digit tax identification number, which I could not generate. So I was wondering, was there a time where people migrated from 7 digits to 12 digits, or is it a different platform that runs 12 digits, separate from the 7 digits that I have always used as a salary earner? Is my question clear?
Yes, I got your question.
Thank you.
However, the point is that for the payer ID that has to do with individuals, that is being handled by the respective internal revenue service of that affects where that individual is resident. So for me, I really don't know much about that because I work with Federal Inland Revenue Service, and we are more concerned about we administer companies' income taxes, and we generate tax identification numbers for that. And I would have a handshake with one of my colleagues at the state level to verify what you have just asked, and I can reach out to you later on that.
All right, thank you.
Thank you. Yeah.
All right. Thank you. He will reach out to you. That is a promise. Also, thank you, Broke, for the wonderful series you've taken us through this evening. I know the Lord will continue to bless you and then protect you and keep you for us so that we want to hear more of this. And then for our friends who have joined us, I think some of them have left, but I'm still seeing a new name there, Amara. Would that be Dickens' wife? But if she's the one, fine. But if not, Amara also is in the house. We are glad you come to join us this evening. Please. And then, of course, Mr. Okechukwu Okeze. I'm just seeing the name too. We are glad you are also part of this program this evening. And then one thing is sure, that Potter's Outreach family meets here every Tuesday evening for our leadership series by 7 o'clock. Once it's 7, there about 8:30, we are here every Tuesday. Tomorrow again, sir, and then Ma is another session for prayer time. The same time, 7 p.m. On Zoom, all on Zoom. You don't need to travel physically. Come here, connect on the same platform by 7, and then wait. If by 7 you are here and nobody is here, just be patient. In the next few minutes, people will join you. Also on Friday, during our Bible studies, Bible lessons, the same time, 7 o'clock, the same platform. Then on Saturday, like this Saturday, we are having a cultural Sabbath. I wish both of you and any other person that is in the house should come over to number 18A, Kefi Street by Obalende Aziz. From Obalende, that Kefi Street, stop at Antiayo. The building you are looking by you there is number 18A. You come, and on Saturdays we do worship together. It's a day of celebration. Tomorrow, we are also going to be celebrating tomorrow. We also want you to be there. And then we move on. So we are happy that each time you are going to have time, please always join us here. You can never regret why you are here, and the Lord Almighty himself will bless you. At this time, I call on Dr. Oloma to lead us in the closing prayer just after the last media song. Media team song, please. After that, Dr. Oloma will lead us in a closing prayer. Thank you. God bless you all.
I'm resting on the upward way, new heights I'm gaining every day, still praying as I onward bound. Lord, plant my feet on higher ground. Lord, lift me up and let me stand by faith on heaven's stable land, a higher plane than I have found. Lord, plant my feet on higher ground. My heart has no desire to stay where doubts arise and fears dismay. Though some may dwell where these abound, my prayer, my aim is higher ground. Lord, lift me up and let me stand by faith on heaven's stable land, a higher plane than I have found. Lord, plant my feet on higher ground. I want to scale the utmost height and catch a gleam of glory bright, but still I'll pray till heaven I found. Lord, lead me on to higher ground. Lord, lift me up and let me stand by faith on heaven's stable land, a higher plane than I have found. Lord, plant my feet on higher ground.
Dear Lord, we thank you so much for today. We thank you for being with us throughout today's session and for using your son, Kelechukwu, in explaining to us our responsibilities as citizens of Nigeria. We ask, dear Lord, that you be with us, make us good ambassadors for you wherever we find ourselves, and bring us together again tomorrow for our program on for Wednesday prayers. Continue to be with us as we continue with the week. Bless us and keep us. Shield us from every form of harm and danger. Protect us and continue to sustain us until we meet again on Saturday physically. Do this for us. Take all the glory. For we've asked in Jesus' name. Amen.
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 Good night, everyone. God bless you all.